So, good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, date March 22, 2023. So, before we go ahead, I would like to give a small disclaimer that any stock, any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for education purpose. So, without taking your much time, I'll start with Nifty 50 chart analysis for the day and then for the past few days as well. So, talking about the decline that Nifty faced on account of the banking crisis across the world. During that time, Nifty breached its 200 DMA as well and made new lows around the 16,850 levels. So if we talk about Monday's session, Nifty did breach its previous lows of 16,850, but made a very strong comeback during the latter half of the day and closed in the top half of the day's range. That's why even when a new low was made, but as Nifty closed in the top half of the day's range, this was considered as day one of an attempted rally. Yesterday's session, if we talk about it, Nifty was able to hold above the recent lows of Monday's lows. So even yesterday's low were considered, yesterday's session was considered as day two of an attempted rally. So if today Nifty is able to hold above Monday's lows, that is the third consecutive day. Today we'll be able to shift the market status to rally attempt. And post that, we all know that today is the US Fed's decision, and if the quantum of rate hike continues to remain small at around 25 bips, maybe we can see some kind of good market reaction or positive market reaction to the same. However, if the quantum of rate hike is higher, or probably the market or the commentary from the US chief goes on a hawkish note, then some kind of turmoil can be seen in the market. And once you are in rally attempt, we know that from taking the market status to rally attempt to a confirm uptrend, we need a follow through day or an FTD, that is an up move of 1.5% on higher on volumes higher than the previous day. And going forward, if Nifty reclaims its 200 DMA and other key moving averages, then the confidence in the market rally will automatically increase. Till the point in time, Nifty is below the 200 DMA. Uh, the confidence in the market rally continues to remain low. However, on the flip side, if we talk about it, if Nifty, on account of the global uncertainties at the moment in terms of the banking crisis, plus the rate hikes happening across the globe, if Nifty breaches its recent lows of Monday, then uh, Nifty will go back to a downtrend. Talking about key news, FI sold shares worth rupees 1,454.55 crores yesterday, whereas DI bought shares worth rupees 1,946 crores. BL Kashyap and Sons secured a new order worth rupees 313 crores from domestic unrelated client, Railways Land Development Authority, as on date, and the company's total order book stands at rupees 2,402 crores. Zydus Life received the final approval for its tofacitinib tablets 5 mg and tentative approval for 10 mg from the US FDA. Tablets is indicated for the treatment of adult patients with moderately to severely active rheumatoid arthritis and with active prostatic arthritis. Talking about the other news, Tata Motors plans to increase the price of its commercial vehicles by 5% starting April 1 to comply with the most stringent BS6 Phase II emission norms. SG Infra also declared as the lowest bidder by DYCC CNB Engineering for redevelopment of Kanpur Central Railway Station at Kanpur. The project cost is around 677 crores and the construction period is 36 months. Talking about the global market update, considering the US Fed meet that is expected to happen today, the decision that is expected to come out today, if probably uh, rate hike comes in at around 25 bips, market is expected to stay on a positive note. And similar footing you could see in the yesterday's US market as well. All the three indices closed above the 1% mark. Talking about Dow closed above the 1%, S&P 500 closed up by around 1.3%, and Nasdaq Composite by 1.6%. Yesterday, S&P 500 also reclaimed its 100 DMA as well. Similar market movement was seen in the Asian markets as well. The Asian market, that is Shanghai, was up by 0.4%, Kospi by 1%, and Nikkei very strong by around 1.9%. Similarly, can be seen in the Indian market as well. That is, Indian market is expected to hold above uh, the Monday's lows as well, and you can see some positive movement happening in the Nifty as well, considering the overall uh, uh, positive movement in the US market and the Asian markets. And if we talk about SGX Nifty is also indicating a positive opening of around 70 to 75 points. Talking about the sector view, I mean, what's very stark at the moment is that all the sectors at the moment, and even the broader market, is trading well below the 200 DMA. And the sector that is the most below the 200 DMA is your 50 DMA is your metal, which is around 8.6% below the 50 DMA. And similarly, it's around 6.5% below the 200 DMA as well. On the energy front as well, as you can see, it is 10.6% below the 200 DMA. FMCG and your banking sector is the only one that is probably holding above the 200 DMA. Others all are trading below the 200 DMA at the moment. And the broader market indices even the broader market indices continue to remain under pressure. And with probably some kind of positive macro development, if it happens from the tonight's decision, then you can see some kind of movement happening in certain sectors, certain churning happening in certain sectors, and maybe on the overall Nifty front also, you can see some kind of positive movement, considering the overall placement in terms of the rate hikes, in terms of the positive of the negative commentary happening as well. But as William O'Neill always said, keep the charts handy with you. Always rely on the market movements of the key indices or the sectoral indices and the broad market indices, rather than just with the news. So thank you, and that's it from our side. And stay tuned to the space of Prevail with William O'Neill India from Monday to Friday. Thank you, and happy festivities